like the 4-quadrant way of financial planning. And what he means is financial planning is not just financial. There's the other 3 parts of it we overlook most of the time. So, for example, when this is what he had when he was sitting at the airport on the airplane, and he asked the neighbor, okay, when you think about assets, what are the assets? He said, okay, money, real estate, retirement plan, businesses, jewelry, blah, blah. Okay, these are called financial assets. And then, don't you have something core assets, your family, your health, your happiness, well-being, your values, your talent, right? Your skills. These are core assets. These are very important. A lot of time we overlook that. We focus on financial only. And the experience, education, life experience, reputation, and the traditions, like, whoa, that makes sense. It's like an experience, a lot of experience we learned to think about that. How much tuition we paid already, right, in business and in life. And then, like, when I look at education as experiences, that makes me feel better when I pay tuition for my daughter's private education. It's not an expense, it's an investment. So that's a good perspective, right? And so with the quote, and when you ask people, okay, are you willing to trade your core assets and experience assets with financial assets? People always say no, no. So, and then plus, we have the contribution assets. The contribution assets, so at a certain point in our life, and this is true to all my clients, when you are financially, enough, you will find something, you want to have something meaningful, something that you contribute to, right? And then the contribution assets, it fulfills your need of contribution. However, also it comes with enormous tax benefits. And we will see some example today, okay? Like enormous tax example. And that's the beauty of this tax law. The American, one of the things that make America great, I think, is, the tax law. It really encourages people to contribute and take care of a community by the society rather than by the government. And then, it encourage people to take advantage of this tax incentive. So really, we are looking at the core assets in the middle, and then the rest, the 3 units are all together. And then all of these will impact each other, will mutually support each other, right? If your core assets is great, your experience assets is great, it'll help your financial assets. And your contribution assets is great, continue to help your financial assets as well. Like even you contribute, you save tax. And what you contributed in, say, your private foundation, legally, it's not your money, but practically you manage everything. It's still your family assets. It's your legacy, right? So it actually, you think you contributed, it's less money. No, actually you still have more money. This money does not go anywhere. You have full control, and then you don't have to pay tax. Okay, so that's how you look holistically. Okay, so really we want to, when we do planning, we think all these aspects together.